In this video, I'm going to walk you through the Chapter 9 regular homework question number 4. First of all, it's important to notice what is the question asking. The question is asking you to calculate the company's revenue and spending variances. When you calculate the revenue and spending variances, you are needing to analyze the flexible budget compared to the actual cost. So the top information is the standard cost. And when you create your flexible budget, which is the first step, you will base those total cost in the flexible budget on the actual cars washed. So you're going to have to do several multiplication problems to calculate the total cost that should have been incurred when they washed the actual number of cars washed in your problem. Mine says 8,300. So my first step is going to be to create the flexible budget. This data up here is the standard cost. If I wanted to create the planning budget, I would multiply all of those variable components and add in the fixed on the expected. But we need to calculate the flexible budget, what the budget should have been when 8,300 cars were washed. So I have copied my data into an Excel spreadsheet. Basically, what you are looking at was the given data at the top of the problem. My revenue is given in the problem as $6.10 per car. I'm going to flip back to the question and show that to you real quick. On the problem right here is where you would find what you should have charged each customer per car, $6.10 on my problem. That will be the first part of my flexible budget. We'll multiply the $6.10 by the actual cars I have washed. 610 multiplied by 8,300. So my revenue should have been $50,630. I actually generated $52,120 in revenue. So my spending variance would be the difference between those two numbers. Or my revenue, I should say my revenue variance. The expenses are going to be called the spending variances. So the amount I actually generated is greater than what I thought I was going to generate in revenue. The difference between what I actually generated, which all of these numbers are given in your problem. All of those were given. I did not have to calculate those. I do have to calculate all of the should have cost. So I'm going to calculate for my cleaning supplies the per value times the number of cars I actually washed. Now on the electricity, it has a fixed component to it. So when you calculate the total, you will need to multiply the per unit cost, mine is given as 10 cents, by the number of cars you actually washed, and then add in the fixed component. Maintenance does not have a fixed component, so it would just be the per unit multiplied by the number of cars you actually washed. But your wages and salary work similar to the electricity. You need to multiply the variable cost, the per unit minus 40 cents, by the actual cars washed, and add in the fixed component. The depreciation doesn't change from the planning budget to the flexible budget. We are working on calculating the flexible budget. The rent fixed cost doesn't change either. And then the administration looks like it is a variable and a fixed component, but I'm just going to double check on my worksheet. It didn't copy over. It is 3 cents per unit. So I'm going to have to fix that on my spreadsheet. This is just rounded off it will be 3 cents per unit times the number of cars that have been washed. Fix this one. Start with the parentheses. I have 3 cents per unit times the number of cars that have been washed. Plus, I'm going to add in that fixed component. So this really is 3 cents if you look up at the detail of that. So now I have my total expenses that should have been incurred, and I'm going to do a sum formula on those. My total expenses should have been $26,794. We'll subtract that from the revenue to find out what my net income should have been. So now I will calculate, just by doing subtraction, the spending variances. All of the revenue is called a revenue variance, the difference between what I should have generated in revenue minus what I actually generated. Remember, these yellow numbers came from, they were given in the problem. I just copied them over from this income statement given. So it says the actual revenue is $52,120. All of the actual costs were listed here. So just copied those over to my spreadsheet. So now I'm just going to subtract. I already explained the revenue one. Here's what they actually generated. Here's what they could have generated. So they generated more than they budgeted. That's favorable on revenue. If I generate more cost, though, if my actual here on the cost is greater, looking at this, it would say, here's my actual cost. Here's what I should have generated. That is going to be unfavorable because I actually generated more cost than I should have. The next one says, here's the cost that I actually generated, $1,890. Here's what I could have generated. So the difference between those two numbers this time will be favorable because my actual cost, I saved money from what my budgeted amount was. The next one says, here's what I actually generated in maintenance costs. Here's what I should have generated. I actually spent more than I should have. So this one should be unfavorable. The next one should also be unfavorable because my actual costs were greater than my budgeted cost. This one, there's no difference between what I actually generated and what I should have generated. The third, the rent is going to be unfavorable because I actually incurred $2,000 of cost. My budget says I should have only incurred $1,800. And then the last one here will be favorable because I saved money on administrative expenses. So now, if I want to total up the expenses, I cannot just sum up these numbers. And I don't want to include the revenue difference, the revenue variance. I will add the ones, it looks to me like my unfavorables are greater than my favorable. So in my formula here, I'm going to make the unfavorable ones a positive functioning. There are more unfavorables. I'm going to subtract anything that is favorable. I'm going to add the unfavorables on this formula. They have to have opposite mathematical signs. So my total expenses were greater with the unfavorable items. Again, don't include that revenue top one when you're adding up the total expenses. But on the net income difference, I can take the revenue minus the total expenses and find the difference here, and it would be favorable. Another way you can check this is the difference between the two net incomes. Here's what I actually generated. Here's what it says I should have. So if I was over on my budget there, $438 was because Here's what I actually created in net income. Here's what it says on my flexible that I should have created in net income. I will then take all these numbers in this column and transfer them over to those red numbers to my homework. So finally, I took all of the variances we calculated and transferred them over to the homework problem, just as my spreadsheet had, and I checked my work. So if you have any questions, please send me an email, but the key item is to calculate the flexible budget amounts first and then compare those numbers to this given actual data. Thank you.